In this video, we're going to talk about why the stock market is about to go insane, and not in a good way. Now, cue the intro.
Come on.
Hi everyone, welcome back to my channel, Investing with Saraan. If you're new to this channel, I'm a young dividend investor who wants to end up earning $1,000 in dividends every month so I can retire early. But if you click on this video, you're one of the many individuals who are wondering when the next crash will be. This is a scenario that makes many of us feel uneasy about the future valuation of our personal investment portfolio and the potential of it falling significantly in value. To make matters worse, it's one of the most common topics that media outlets are talking about constantly. The most popular stock market YouTubers are also adding to this fear by creating videos about it, and it's always trending. This is pretty similar to what I'm doing, but in a more informative method. The reason for this video is to let you all know why this correction, or even crash, will happen. While in history, September has been one of the worst months for investors within the stock market. Within the S&P 500, September has been the worst month with average returns of 0.7%, and that's in a decline. This has been one of the only months that from 1980 to 2019 that has been negative, and they all have an average return of 0.67% within each month of the year. What makes matters worse is that in major events, September has been one of the worst months within the biggest declines in the stock market. For example, the S&P 500 declined 55% of the time within September since the Second World War. To add to the situation, this upcoming September is complicated with various factors. With the market pushing and breaking all-time highs, many buyers and holders of certain equities are deciding on making a major sell-off. There are also threats such as the Delta variant that is currently affecting the world right now, with lockdowns in Australia and many other countries having more ICU patients. This paired with the flu season and a cool down from July and August highs will ultimately cause a correction and, in the worst case, a crash. But after hearing this, there are some of you that may be panicking from the situation, and I'm here to tell you that you shouldn't. In general, buying stocks on dips to earn extra return, then switching to cash to wait for another pullback sounds like a good strategy for some folks. After all, buying low and selling high is what investors are told to do so. But investing only on the dips, which involves some market timing, returns far less than simply buying and holding, according to Samuel Lee, who is an investment advisor at CVRN Asset Management. His research states that the buy and dip strategy would earn a third of a return of a buy and hold strategy with much higher volatility. In the chart here, Lee maps out the cumulative excess return, that is return above cash, of this variation of strategy versus the market. This breaks down the cumulative return to average annualized returns with corresponding volatility, and this shows you how bad of a strategy buying the dip would have been if you just bought the dip and cashed out at all-time highs. So in order to prepare for this upcoming volatility, it's better to hold and buy the dips rather than selling and then rebuying the dips. I hope with this knowledge, you will be ready for the September volatility and the stock discounts that will come to your hand. But now that you've learned about the upcoming September volatility and how to combat it, remember to punch that subscribe button down below and drop a like. Remember to click that notification bell so you don't miss any of my videos. It's been Saraan, and join me back next week where I'll show you my 1-year progress of my dividend journey. Bye for now.